Sanjiv Bhasin, who's joining in on the show. Sanjiv, good to have you on board. Let's get a sense from you then how you're looking at Maruti, given the fact that now you've got Citi as well endorsing its view on the stock, saying that it's one of the top picks, and we've seen a pretty strong meteoric rise in Maruti of late as well.
Yeah, good morning, Avan. Maruti has been under our coverage since 6.5, 7, 8, and we continue to thought we thought 12,000 was a very big number which we will get to. But now I think, given the consensus and the underweight of most overseas investors, Maruti becomes another catalyst for growth. We are aware that the rural incomes pick up, the aspiration of owning the Alto, the Ertiga, or their new models, and their adaptation into hybrid and EVs. That is playing very well for them. So I think the operating leverage has played out well. Numbers were far in excess of what the market was making. I think it's the best India demographic play which you have. So as a disclosure, we have it in our portfolio and we don't have any intention to sell it in the near term.
Sanjiv, hi, morning. Some words of caution on OMCs actually. You know, CLSA is saying that worries about marketing margins may actually re-emerge. Bernstein is saying that utilities is actually the second most stretched PSU sector or segment in terms of valuations. What is your thought on OMCs?
Yes, Aisha, good morning. I think OMCs or PSUs as a pack, except for say a state bank or couple of banks, you should be lightening your position, particularly metals, gas, and the OMCs. Now it's not that they've been huge outperformers. So obviously, profit booking will be part of the case. But for us, the only overweight here is ONGC, which we are very, very constructive on. The rest we would be slightly cautious. We also own IOC and Nalco in our portfolios, which we intend to keep for some time. But like I said, right now the room for comfort is less because of the sharp run-up, and corrections will be part and course of the market. You will see money go into private banks, into engineering. Who thought ABB will be on a circuit? I think Larsen is looking extremely good. So money will keep shifting, and OMCs could see some more profit booking over here.
Okay, fair enough. And what's the outlook then in general on PSUs as a whole, given that you've got brokerages of the view that now the index is looking a little bit expensive at an 11.2 times forward PE?
Avan, when the market goes out of sync, then you come out with price earnings and multiples and expensive valuations. 13 lakh crore has become 60 lakh crore in 4 years. Anybody who's owned PSUs is laughing his way to the bank. And I think the sheer underweight of lot of people have missed this, whole party. Yes, now valuations will look stressed because there is under ownership. And as you see, the marquee names now getting into them, there will be this provincial overbought position, which is evident in a lot of stocks. So we are neutral on them. We are not overall negative. You have to pick and choose your winners and also learn to book profits. Leave the rest of the 10-12% which you perceive in, let the other person earn it, but take home some money. Like we said, get into HDFC Bank, get into ICICI, get into Larsen. There are enough other large caps which can give you much more value for money and still keep you invested after booking profit.
Meantime, let's also get in a take then from you, Sanjeev, as to what the outlook is when it comes to those metal stocks. Just yesterday in trade, in fact, the likes of a JSW, a Tata Steel, they were all abuzz. What's the outlook?
Yes, Aman, that is one space which you are very positive. In fact, if you see the Nikkei hit is on the verge of 39,000, which is almost a 40-year high. And it's metals and banks, because we are seeing that the weakness in the dollar is going to get extended. And as a proxy play, metals are in a very sweet spot. In fact, in the last 2 days, we've added Hindalco. This market is uncanny about this Novelis IPO pricing. And that will take care of its capex. But look at the strength of the market over there, both in Canada and in North America. Hindalco is arguably the cheapest metal stock you can get anywhere in the universe. So we have gone overweight on Hindalco at this 505, 510. We have also got overweight on Vedanta. We own Tata Steel and JSW, and we think and SAIL. And we think this basket is going to hugely outperform in any rally now, taking us to newer highs. Metals has to be a proxy. Hindalco is an ad at these levels. It has fallen sharply for one reason of Novelis overrun on its capex. But I think the new IPO will be at a sharp premium, which actually the proceeds go to Hindalco being the 100% subsidiary of that. I think Hindalco is a cash-rich company generating excellent EBITDA, and I think at this price, this should be in your portfolio along with Vedanta. As a disclosure, Vedanta, Hindalco, 4, 5 of these stocks are in our portfolio, and we think they can give you that extra delta in the coming months.
We have to ask you about what do you make of Grasim's entry into the paint segment. Our correspondent is in Panipat. He just joined us a short while back. They're all set to inaugurate their first, paint plant today. But, for an Asian Paints and a Berger, which have the lion's share of the market, and the kind of valuations that both these stocks are at, 50 times plus, what would it mean?
Yes, Aisha, we debated this couple of days back. Look, a brand like Asian or a Berger is there from many, many years. In fact, when we first joined the market 40, 50 years back, it was, I mean, not me, but Asian Paint was still the brand with Gattu being the mascot. And it has made foray into each and every household. It still has 53% of the decorative segment. For Grasim, it becomes a very, very good ancillary because it's a byproduct from their existing business. And I think there is enough room in this space for even 2 more players to last. We know JSW has also got into that. Asian Paints has seen profit booking or some selling because of that. But we still remain constructive on this company. This is one company along with MRF which has never diluted equity. And if you thought MRF was expensive at 75,000 6 months back, it is now 1.5 lakh. I think it's a good time to get into Asian Paints and Grasim. We own both those stocks, Grasim for the other businesses and the new foray, and Asian Paint because the valuation now is very, very seemingly telling us that the middle income rise is also made brand awareness very much part of parcel. And I think Asian Paint will continue to gain more market share or at least stay at those levels. Given that input costs are falling, their margins may actually do well in the coming quarters.
Sanjiv Bhasin joining us as always. Sanjiv, hi, good morning. Good to have you on the show. And Sanjiv, what a commentary coming in from Kumar Mangalam Birla himself yesterday on Vodafone, a stock that you've liked. What did you make of his commentary and what lies ahead now?
Yeah, good morning, Aisha. Firstly, welcome to the paradigm that Nvidia is now the third largest market cap company in the world. And for all the trollers who thought IT is overbought and overextended, IT index is hitting new highs, even in India. So markets are never say never. You can always expect all impossible things to be achievable. And that is what Vodafone has told us, that it is there to survive. Kumaramangalam has clearly indicated that there will be infusion of capital, which will allow it to get more progress into 5G. Its attrition rate of losses over the month on month is reducing. And I think that it makes a very good, proxy play on the demographic premium with rising ARPUs. The ARPU of Vodafone, by the way, now is 145 and raring to go. So I continue to be positive and let's see how the fundraising comes. In the meantime, we think that whole group is performing, in line with the sync of demographic premiums, with paints now being on the card. And I was surprised they're looking at almost a 10% market share, which is fairly large. And they have the synergies of Grasim playing out very well over the logistics. So I would say watch the fundraising amount in the Vodafone issue. In a bull market, these stocks will tend to outperform once the news flow gets positive. But we need the much needed adrenaline, that is the green money, to come in before you can take further action on the longer term outlook.
And since you did talk about Grasim, have to ask, what does it mean for incumbent paint companies like a Berger and Asian Paints?
No, Aisha, the market is large enough for all three to survive. The market share gain, the brand avenue. This was the same thing which people thought when Patanjali and Lee were there. Now they've coexisted and both are trading. In fact, Patanjali is at all-time highs. So I am very, very positive that we have enough of color on the demographic premium where these little bit of competition will be positive. I continue to be positive on both Grasim and Asian Paints, and we know that the decorative segment, the brand element of change, of elasticity of change is very less, and over a period of time only you will know how much of pricing effect will the new competition get in. But I continue to be positive on both those stocks. They are both in our portfolio. But right now at closer to 22,500, we will wait for more color. We are not in a hurry to extend any bets, and we are plateauing our portfolio between some other stocks which we think have more value, given the likes of HDFC and L&T which we've added, and Hindalco.
Okay, that's interesting. And what's the outlook then when it comes on to IT, Sanjeev? Given that we're talking about Nvidia, etc., and the kind of delivery data that we witnessed just in yesterday's trading day, be it with the likes of HCL Tech, Wipro, or even LTI Mindtree, Emphasis, are you looking at participation from Indian IT as well?
Yes, good morning, Awan. We are bullish on IT. HCL Tech, Wipro have been two of our top holdings. We've also added one of the on the declines, Coforge. We are now very overweight on Dixon. We think the next EMS play is and the type of background it's a correlation to the IT, but Dixon is one stock which we think can head into 5 figures over the next 2 years. So we are overweight overweight Wipro, HCL Tech, Coforge, and Dixon in this in the tech basket stroke EMS play.
To look out for what Sona BLW actually does in trade today. They've got the certification under the Auto PLI scheme, for which they're going to be making parts for two-wheelers now. So that's going to be another stock which is going to be in focus at 612 now. There's, of course, IRCTC as well. They've actually partnered with Swiggy Foods to supply and deliver pre-ordered meals at stations now. There's Godrej Properties. Bombay High Court has ruled in favor of, one of their plots in Navi Mumbai. So look out for that as well. There's Vodafone Idea, like we've already highlighted. There's RBL Bank as well, which is going to be in focus today. Matthew Syriac has bought about 32.75 lakh shares in the block deal just yesterday. Eureka Forbes, we've been talking about as to how the promoter has sold nearly 9% stake via the block deal yesterday. So that's the other one which is in focus. And PFC, which is also considered a fundraising for their FY25 proposal on Feb 29th. That's going to be another one to look out for. Sanjiv, you've cautioned already on the likes of PFC, REC. Having said that, while the momentum is not as smart as it was in the month of December or November perhaps, but, still gains continue over here. What's the call now?
So, Aisha, stocks which have gone up 3-4 times in the last 2 years. We were one of the first entrants when the 11-12% dividend yields closer to 100. We've taken chips off the block. We are not following the trend now. And in power, you have to be selective. I think PSUs, you have to be very, very careful. You name 2 stocks which we are overweight, IRCTC and Concor, but the rest for us is an avoid, and ONGC. Rest, you have to be selective in what you buy. Don't play the chase the momentum. It's good for traders, but investors can burn their hands. On the other hand, if you just read the news on RBL Bank, the first, cat amongst the pigeon was when Mahindra bought a 3%, 4% stake. There is nobody who has a big stake in that bank. And the bank trading one point, even less than 1 time price to book, and given the franchise and brand image, I think is very, very cheap. So as a disclosure, both RBL and Dhanlaxmi Bank, because of the sheer weight of valuation, comfort, and no big ownership, are both buys in our game, in our portfolio, and we continue to be very bullish on both these stocks. On the PSU side, like you said, be selective. You've had a big run in OMCs in the power finances. It is time to take some chips off and get into the big names like L&T and HDFC. Yesterday, by the way, L&T and Hindalco were our top picks, and L&T was an outperformer. Who thought that ABB will be up almost 25% in 1 week? And that tells you that capex stocks, particularly the likes of L&T, are still to be headed for better times.
Okay, there's Indiabulls Housing as well, which is going to be in focus, and they've raised a sizable 3,693 crore rupees via the rights issue. Sanjeev, wanted to, you to reflect on some of these turnaround stories, or actually, could they be successful turnaround stories? Indiabulls, Yes Bank, Vodafone, of course, we've already addressed.
Well, Yes Bank is clearly, you've seen how State Bank has gone from 650 to 780, purely because yes, a State Bank owns 5,000 crore at 10 rupees, which is now 15,000 crore at 30. And there is still a big buyer in Yes Bank, which again tells you the valuation comfort. Well, Yes Bank has a 40,000 crore asset base, which is now 1 lakh crore as market cap. And it will take time for it to perform. But I think Prashant Kumar has done a superb job there. I am again very bullish on Indiabull real estate. It is just a matter of time that the merger of a demerger goes through to an embassy. Embassy arguably is one of the biggest players in the country. They can execute 1 lakh crore in the space of 1 year. That's the type of capability and capacity they have. Indiabull real estate trades at 6,000 crore market cap, and now you have the likes of Unitech, everything else trading at 4-5. The largest land bank owner, both in Maharashtra and parts of Delhi, cannot be available at this price. So Indiabull real estate, the 115 rupee stock, according to me, can double in the next 1 year. It also gives you a very good proxy of ownership of Embassy, which I think is the largest player in the country now as far as construction and building goes.